All right, welcome to another Forex session. Today, I want to do another example on the candlestick with obvious weak rejection. And also, I'll also show us how we can confirm our entry with another category. That is using the candlestick with big body and the candlestick with obvious weak rejection to make a better trading decision. Now we consider the first example using a bearish market. Now this is a bullish market, as you can see. This is a bullish market, and this is an obvious weak rejection. Please, when I mean obvious, let it be obvious. Let it be obvious. And make sure it's forming with the direction of the trend, if you can, is more profitable. Like, look at what is happening. This a very obvious weak rejection, but as you can see, is forming. There is a resistance at the top, and there is no level of break of structure. There's no level. This one, there's no level of break of structure. So meaning that you don't trade this type. You don't trade this type. You get it? Now, if you look at this one, it's obvious, but there's no level of break of structure because this is structure. So not every week. Now, there's no level of break of structure. If this week happen on top of this vertical resistance, it would have been much, much better to trade it. But is forming outside a break of structure, so you ignore it, because there are a lot of weak rejection that will be so obvious in the market. But that is why I said consider these three factors must be in play. It must be with the trend. There must be a level of break of structure, and it must happen in a support level if it is a bullish market, and it must happen in a resistant level if it is a bearish market. If you can keep to these three factors, I tell you the truth, you will filter out those candlestick with big body and the candlestick with obvious weak rejection that will not work out. I've tested this a lot of time, and it is very, very profitable. But you must consider these factors. You must consider this factor. If not, you just be trading based on, like, see, this is an obvious weak rejection. If you can see my chart, but it's against the trend. It's against the trend, and you saw what happened. You are seeing what happened. The market struggled, but the one that is with the trend, it is much, much easier to flow with the wave of the sea than to go against the wave. It's the same law that is applied to Forex. Now, if you check, okay, let's look at this example I gave here. Why are we considering this one? Why did we consider this candlestick? Now, this candlestick was not our entry. Our entry was this. Now, this is why. If you check, there's a structure here. You see? Now, the entry is not this candle because of this structure on top. If you look at this, similar thing played that here. Similar thing played that here. But if you notice, there was no break of this structure. I told us that there should be a level of structural break and a clear retracement. A clear retracement is very, very important. There should be some level of structural break and a clear retracement. If you are not patient enough to wait for this structural break and clear retracement, you keep entering and you'll be losing and you'll be stopped out several times. Now look at what happened here. The same thing that plays that here is exactly what played that here. Now, this is the same week. This week, rejection candle is exactly the same with this one. But in this case, there was no break of this. The market rejected from there. You get it? But in this case, the market broke out. You can see there's a level of retracement. There's a level of retracement here. Now, candlestick with big body, which is the first category we considered, now confirm this market movement. Now, okay, let me draw more structure. As you can see, you're seeing it, right? So the market move broke this structure. This was the first line, horizontal line, that this price could not break. But at this particular point, the price broke it, and you saw a clear retracement. This is the kind of retracement I always advise people to consider. A very clear retracement forming a chart pattern, and this chart pattern was broken. The structure was broken, and the market retraced. And all of a sudden, you see candlestick with big body, which is one of the candlestick we are considering or we are focusing on. And the market closed outside. This is a 90% confirmed trading opportunity. 90% confirmed trading opportunity. These are the kind of trade you should be looking at for. You have to be patient. You have to be patient. So many persons will trade this, they will lose. Now, you will not trade this, you will not make profit. Instead of you to be in profit, you are now making back what you lost. That is why it is advisable to wait for these three factors to be seen clearly. The trend should be with the trend. It must be on a support level if it is a bullish market. It must be on a resistance level if it is a bearish market. And there must be a level of break and retest. Now, if you see these three play out in any market movement, you are good to go. You are good to go. Okay, so it's very simple. It's very, very simple. You just need to be patient enough. You just need to be patient enough. Now, when we go to the third categories of candle, I will explain more. Like if you see what happened there, now you will see a lot of candlestick with small bodies. Though I will not go into that in this lesson, but previous lessons we are going to look at the candlestick with small body so that we can learn to combine these three candlesticks in our trading decision. We will learn to combine it so that if you are seeing this, this is confirming this, it gives you this courage, it gives you this courage, it gives you this confidence in your trading system. Now, of course, let me show you where I will put my stop if I'm to trade this. Now, I always want to put my stop in a very logical area. In a very logical area where I'm certain that if I'm stopped at, that means the market wants to reverse. I hardly get stopped at and the market move to my direction. If I'm stopped at, the market want to reverse. So now if I'm trading this is what I will do. Like I told you, 1:2. If I'm entering from this candlestick, now you can put your stop at this level. That is also fine. You can put your stop at this level. That is also good. And you are targeting 1:3. You can also put your stop at this level. You are targeting 1:1 or 1:1.5. Is also very okay. Now, just that when you are putting your stop at this level, you may have to reduce your lot size. If you are putting your stop at this, let's say, for example, you want to use 0.1 lot, and this is where you want to put your stop. Now, if you decide to put your stop here, you should be using 0.05 so that you will still risk the exact amount you want to risk. Is it clear? Well, we are going to go into this when we start talking about risk management. We're going to go deep into this, but just note that if you are putting your stop here, your lot size should be smaller than when you are putting your stop here. But either way, you are good. But don't put your stop at this level. That's what some persons will do. Put a stop at this level so that they will be targeting 1:6, 1:7. Many times the market will not just move. There might be some manipulation, some retracement, some movements, and stop on. The market will come, stop you out, and finally go to your favor. But if you put your stop here, no matter what the market do, if the market stop you out from this point, that means the market want to reverse. Okay? So that is why we must learn to be patient with the market. Don't just, you want to enter the market, now, you want to make some cool cash out of the market. No, it takes patience. It takes patience. Okay, I want to stop this video here. I believe that we have seen how we can combine the two categories of candles in our trading decision. We have seen how we can combine it. And I believe as we practice, we'll get better and we'll get the best out of this course. I believe that so strongly. Okay, thank you very much. I always want to advise, spend more time on your chart. Spend more time on your chart. Practice, 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 practice. With time, you become a master of these things. With time, you don't need anybody to tell you what to do. You just follow the market movement. Okay? All right. See you at the next video. Thank you.